Good afternoon. My name is Scott Rudd, the Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead. So November is over. You're going to see so many stats about the biggest moves in so many sectors, whether it was in the Dow or whether it was in the financials or today in oil or you name it. There's been lots of movement. Okay, and sometimes it's easy to be involved in the movement, and sometimes these situations are hard to buy and they're almost just as hard to short. So you have to pick where you want to live, how you want to navigate, and and get involved. So post-election, a lot of people said, hey, or if Donald Trump wins, we're going to crash, or we're going to correct, and lo and behold, the market said something different. We tried to put a little bit in front of you a situation like what happened with Brexit, where you had a few unknowns and had to evaluate it to then figure out what's next versus just guessing. So anyway, if you look here at the S&P Cash, this was that post-Brexit move. Remember that sharp move down, which was expected after Brexit, right? Everyone said the world would end, and then it didn't end, and that happened. The snapback could have been just a snapback, hard to trust, but once you saw commitment to it, you know what? That gave some clues to get long for an additional move. So when the election happened, earlier in November, we saw the corrective phase prior. At this point, everyone thought that if Hillary won, we'd have a rally, and if Trump won, we would crash. So anyway, going into election night, that happened. Remember, election night itself, we were down 80 handles, and by the time the morning rolled up and we heard Donald Trump's rhetoric, how he was, willing to work with both sides, not going after Hillary, looking to, whatever, be pro-business, all of a sudden the market reversed here. And that, to me, I remember was a good trade. Okay, and if you missed that, you had 1, 2, 3, 4 days to get involved, because once it digested above this descending trend line, we talked about going to all-time highs. So if you remember the VTF, you knew from here to about here, that was the calculated trade. Why was that the calculated trade? Because 2193 was the prior high, so why wouldn't we get at least up to there? So with that being said, you had a nice trade here, an accumulation there, add, and then trim and trail to finally right around here is when we went back to tactical. So if you would have said to me today, the S&P would be lower while oil's up 8-9%, a few days ago, I would be like, there's no way. I knew we weren't perfectly correlated, but I figured, oil stocks having a big move would help the broad indices. I didn't think that, high beta tech would be so weak today, or the Russell would be getting continuation, but the market gave you some of these clues. So, right now for the S&P Cash, you know what? I was long for a lot of the day, and what we had here is a small red dog reversal. What's a small red dog reversal? That's when you push through prior highs right here, and you can't hold them. So for me, I get out of it. Doesn't mean go all in short. Doesn't mean it's rally over. Just means that, we're sitting here on the 8th day, and who knows? Maybe we break below this and see a little bit more of a move down to, the 21 day, which is still deemed strong. But for today, pushed above. Couldn't hold above, so that was a sell signal. You could have tried a few little spots during the day, but for now, I think it's more of a neutral versus wait and see. Why is also because to me, when I see a lot of my high beta names that I know haven't led this market, they haven't led the market, show relative weakness early, it makes me just a little bit more hands off. I tried to be long a few things today. I tried Amazon, went from negative to up 5 and then failed. I got out of it. I tried Netflix. It was a great trade in the morning, went above 120 and failed. And, there was even a little bit of, trade in Facebook off the open, but then it failed. So, you take a quick look now. These things don't look like anything constructive to buy. What does this show me right now? Came into the descending trend line here and kind of poked through it, and it was sold, distributed, not accumulated. You look at Amazon. At this point, I tried it today, thinking, okay, it was as high as 792. So why not try it for a red dog reversal here? And it didn't happen. So I got out of it. Went red, said, okay, now I'm done. I actually made a little money long this thing, and it closed in the lows. Maybe tomorrow we get a little red dog reversal here, but no reason to guess and be long it. Maybe something like that happens. Also, Google, that's been sort of strong or stronger for itself. What did it do? It failed into resistance and turned lower. Facebook, this was looking constructive, and then it got downgraded, and then what happened here? Failed at the the 21-day and went red while the market was green. So right there that says be a little cautious and wait and see. We've been taking nice trades here. This was one of them. And then you had a little bit of a reversal there, and it's really never been able to regroup. Yesterday some guys made some money long BABA, and then BABA also today, didn't fall apart, but just was rejected at the 21-day, but still kind of above this. So these were not the place to be. Off the bat, where I did make money was oil. Why did I make money in oil? Because I was like, you know what? They just pulled oil back 5%, so up 6-7%. It's not like so crazy because we weren't up 6-8% going into it, whereas priced in. Nobody really thought a deal would happen. So I bought the USO and I accumulated it. Okay, because look at this pivot right here. To me, I was like, we're only back to where it was last week. So I figured it would be a decent buy. So I still have some, but it was worth accumulating. Now you have this big gap here, which it's open. I do think, look where it was. This was prior year. Before there was even a deal in October, this was as high as 1170. And now this is where we are. Everyone's ranting and raving the huge move in oil we had today. But meanwhile, it retraced for 5 days going into it. So that's why I said just don't be short and have short on the brain. So I do think it could work higher. I've been talking about the XLE being constructive for a month already. We've been talking about how, way back here a year and a half ago for the macro guys, and this is what I put in the post-Schwab thing, it was below the 200-day, okay? And then here, it's been above the 200-day. Above the 200-day for 5 months, showing you institutional interest accumulating it. And now today you had a clean break. We've been talking about 76. Well, it's almost at 76. I was going to put in for my 2017 report that I think it's going to see 80, but might get there beforehand. But all in all, finally, a clean trade. And is it unfortunate that it didn't happen from here? Remember this? It looked like a nice bull flag, but this probably got a lot of people out of it. It had to come from a lower level into a binary event, and then boom, big gap up. So now I guess we'll see if this holds moving forward, and see how these stocks react. Some of you guys made some money in these little ones, these little frackers. It's like EMES, big day one, so maybe it gets to day two. This WLL, some guys were looking at the volume, big day one. It's like these things have come from a lot higher, so maybe some of these little guys with big volume are worthy of more upside. EOG, what did that do? Actually this is a leader. Look at that nice clean move above a prior resistance zone. So the market didn't care too much about this. So anyway, so oil and oil stocks were the strength today. The banks that have been strong extended again because of the strong economic news we've been having out there. Goldman Sachs and Fuego. It's kind of upsetting when things reach your price targets and beyond, and you don't play them anymore. Because I remember here we were playing, and I said, what was it right here? Oh, Goldman Sachs probably fills this gap and goes up to here. And then once it did that, I'm like, maybe it gets up to 190. I did not think it'd be 220. But anyway, it just had a consolidation phase, right? What's a consolidation phase? Well, here's your fast and furious move. Let the 8-day catch up and took off. So it did nothing for 7-8 days and continued. JP Morgan, every day I put in my note, I said, the banks need to hold this. If you're holding the banks, hold versus the 8-day. And it held the 8-day every day. That's why I put that pivot. And then I list where the pivot high is to see what it can get through. Okay, this one is almost there. Bank of America, same thing. Talked about, can it hold the 8-day? It held the 8-day and then could take out a prior pivot, and that's what it did here. So lots of ways to stay with this. We also talked about Bank of America so many times in the past few weeks that 2017, my objective is 24 to 28. So look for a better way to sit long versus, looking for a cute short. And the way we came up with that, it might be there earlier than I thought, was because of this. And then this would be prior resistance. And look where it came from. It did a whole. This is like 6-7 years of a base of doing absolutely nothing. So yes, it had a big move in the last 2 months. Remember when we were all over this thing down here? This was when I probably sat long from 8 till 12 or something like that. But anyway, look, it cleared this resistance, and now it's going to another zone. Rightly so. Lots of interest rate correlation here. But so hopefully you're just sitting in that thing and making some money. There's that spot. If you go back to the bios, some guys are worried about the bios, and if you're in them, I would be a little worried too now. You look at this is the long-term chart of the bios. Here was one break, another break, another break, then figured maybe at some point now we have a little bio or healthcare friendly president-elect that this gap up after post-election could hold. And look at this, rejected, rejected, rejected to close on the dead lows. I don't know what to make of this except for don't be long it for now. Wait, maybe you get a reversal like this and next time it goes from lower. But for now, it closed below this, showed relative weakness today. Some people are probably short into this for tomorrow, but it doesn't show you that you should be long. The TLTs, it's been broken for a long time. Didn't have much, it keeps reversing intraday and then opening lower. So maybe sometime it changes that, but this has been broken since How could this happen? Everyone always says, how could this happen? Well, it could happen when it gets below the 821 day and below the 200 day. That's a broken trend and you shouldn't own. Same thing with the GLD. The GLD was sold the day after the election right here, and it's been below the 200 day since about 119, and then this is where it is. So if you're trying to play cute little bounces, you can get run over. Trying to pick up quarters in front of a steamroller is just not a fun game to do. It's been below this 8 day for quite some time, and it really broke right there. So you have a lot of reasons to be away from this and maybe even short it. And then we also put in that PowerPoint when I did the post-election Schwab trade to sell it that day, and if you wanted to wait, you could have seen that day evolve, and that wide range bar tells you from like, what? Hell. So here we are, November's over. We'll see what type of day comes tomorrow. We might get new money in, which we usually do, or we might not. You've definitely seen divergences among sectors and stocks, and stocks even that start off strong in the morning just start to fade and wilt, and you got to take those trades when you get them. The strongest names, you want to short them, wait. You know what? The Russell. Okay, the Russell was up for 14 or 15 days. Everyone was trying to short it. Gave you no clue to short it. Then finally, it gave you one clue to short it, which I'll show you why. That's all you needed. Okay, from here to here, okay, not one red bar, right? This is the what's it called? This is the IWM. This is when it took out the 8 and 21 day, the 50 day, held here. Okay, not one reason to tell you to be short. Okay, then finally, on this day, what did it do? You'll see it broke below a prior low here and closed below. That was your first exit signal. Why was it an exit signal? Doesn't this candle look a lot different than the rest of these? Okay, so right there, you don't want to see it take half back. You want to start shorting rallies until it changes. And then the next day, came in halfway, sold down, and then now it's on the 8th day. So you didn't have to anticipate and roll it up this whole time and miss some of the move and lose brain power. You could have waited for it to break below a prior low right here. Or you could have said, okay, now this wide range bar showed me that people have sold it. Let's wait for a bounce back, and then here was your bounce back that was controlled halfway in, and this is your close down. So now we'll see where it's buyable. Maybe tomorrow we get a red dog reversal if it trades below and comes back above for a buyable pullback, or wants to see a little bit closer to the 21 day. But for now, at least you had your sell signal here, maybe your short signal. You didn't have it the entire way up. So don't anticipate. You just have a plan and wait for the market to confirm it. And that's about it. We'll see you tomorrow morning at the morning call. Have a great night.